Okay, 25th of February. Welcome to the Daily Investment Show. Rudy here, where we go through ASX US indices, subsectors and commodity prices, looking for places to invest using the ratio charts. Okay, so let's just start with the ASX 300. We're getting a bit of a giddy up. It's a very nice bullish candle we've got going this week. Still not might be a squidgen of a little all-time high, but I'd say this week will determine that. And it might be prompted by a stock in the US reporting tonight, which we'll go through. So the financial sector. So again, so it's going to be led by this fellow here, CBA, who has sprinted a lot the last month. So not at all-time highs yet. So interesting. Materials sector, as expected, giddy up. Very nice. So so for those who don't know, so if we take the ratio of materials over the financials to see who's outperforming, so you can see materials outperforming financials. So this was your last week or beginning this week was time to switch from financials to materials, and you'd be making more money. The XEJ, the energy index, looking beautiful. XGD, our gold miners, looking beautiful. The gold miners over the financials, so I expect that to continue. Real banks over paper banks. Tech sector got a bit of a bounce, up 6% today. So that's a good start. We'll look at the software sector in America because it had a bit of a kick. Discretionary sector down. So it'll be interesting to see if it can catch a bit of a bid, because that's a big wallop. So the surprise of the day, consumer staples. It's a nice, we call a break from a bull flag. I'd say we're going to have to hit, but that was led by this guy here, Woolworths. So we had him as a little buy down here. So who would have thought? They kicked ass on their profits. But I'd say it's going to have to hit some resistance up here. So staples, who would have thought, hey? So the old staples over discretionary. So the switch was on. I didn't think it would be that strong though. The property sector. So there's no joy there. Okay, over in America. So we're back in the range. The NASDAQ. So we're back in the range. We've got to wait for a break either way. So we need the mags. This is the Magnificent Seven stocks. So they basically need to punch through. So we need some, if the overall American market's going to lift to new highs, these guys need to do it. And that's going to be led by Nvidia. So this is, if you didn't know, it's twice the size of the ASX share market, this stock. A 10% move is 25% of our GDP. And it's reporting tonight after market close. So there's a bit of buying last night. So a rip in this will, I'd say, get everyone humming again. Semiconductors in America, so while that's up, it's good news. The software sector, so is the bottom in. Well, it's pretty encouraging that it didn't break through. So is the tide starting to turn? Energy sector. So it's just chilling. The global gold miners going for new highs. The mid caps in America. So just chilling. So the mid caps over the S&P. So the mid caps have been doing the lifting the last few months. Your super fund. So your super fund's about to potentially just break above 0% return since October. That's good news. If your super fund had a bent towards materials, you'd have an extra 30% in your super fund since July. Join the channel, $10 a month. We do ASX US shares and ETFs. Super funds you can do member direct, a lot of them. Host Plus, Australian Super. Or stake, you can get US ETFs, ASX ETFs. That's what we do on the channel. VGS, no joy there. It's pretty boring. So the same thing with if you got rid of your VGS and switched for some materials, you'd have an extra 40% in your kitty. Aussie 1 year rates. So hanging around 4.2 US 1 year rates. So looked more uppish than downish. US dollar. So it's a indecision candle there this week so far. So it's got to make a decision, it's going to break up or break down. So that'll lead to our Aussie dollar. So our Aussie dollar looks quite a break of a shooting star. These things here, 1, 2, is very bullish. So potentially Aussie dollar could rip through. So let's wait and see. Gold. Okay, getting a giddy up there. So we've now got a new, looks like a new support level there. We've broken the dome, so that looks very nice. So gold in Aussie dollars. So that looks like it's a new sort of support line there. Bitcoin. So Bitcoin, again, trying to pick a bottom. A girlfriend. Wow, hey, gee, she looks even better. She changed her skirt, put new high heels on. We're about to take out this high here. I hope you were buying her down here. We were buying her back here. It was our first buy at $33. And I remember buying here, everyone's panicking. Whoa, what's now look at us. She's doing the same thing. See the cup? Well, I don't even think she's going to do the handle on this one. She's just going to go up. So silver in China, you got to pay 103 US dollars. So the premium in China, $12. So they're paying $12 more US for an ounce of silver than in America. Platinum, giddy up. Palladium, giddy up. Copper, giddy up. So you notice a bit of a trend here on what sectors are outperforming. So US oil, no giddy up there, but it's getting ready to giddy up. Natural gas, so it's pretty volatile thing, this one. So iron ore, so iron ore's now, so this will be good for our big boys. So it's had a little bit of a break, so not out of the woods yet, but long term, it's not panic stations. Lithium, that's fine. Uranium, it's fine. Chilling. Coal, so thermal coal, that's good. Just then coking coal, so that looks more bullish, just consolidating at the very highs there. Nickel, oh, giddy up, look at that, that's very nice. I hope you got some nickel stocks in your portfolio. Aluminium, hope you got some aluminium stocks in your portfolio. Tin, hope you got some tin stocks. $10 a month, we got them all. And finish off with soybeans. So soybeans, they haven't broken out yet. Looks a bit like the oil chart, really, doesn't it? Anyway, that's your daily wrap. As I said, join the channel, $10. Otherwise, see you tomorrow.